Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video for ithought Advisor, I'm going to talk to you the topic selling too soon. When you buy very early, when you buy at a valuation which is completely in your favor, the stock may double within a short span of time. It could be less than a year or maybe within 2 years. When this happens, you feel you've made a lot of profit in a short spell of time. And you start thinking that you will have to wait a long time to make more money. But if you're so early in an idea, it's actually worth waiting that long time because you will make a lot more money. There have been instances where a stock doubled in a very short span of time and then went on to go up many times more later. Most people settle for that smaller component of profit. You would find that immediate doubling would barely be 10 or 20% of the total profit that the idea generates over 7-8 years. So imagine, you're early, you're the first to spot an idea, you bought it early and you didn't last the journey. You bailed out too soon. This could happen to any of us. What can change this? Because that's exactly what all of us need to do, because you can have the best of ideas and you would be getting out too soon in them. Then at some stage you will start becoming so tired that you don't want to look at new ideas because you are regretting the mistakes you did of selling too soon. The only way you can overcome this is by planning to stay invested even before you buy. If you think from that prism, you will see ideas which you can hold for longer periods of time. That's the starting point. If you start there, then you rank companies which you can hold for a long period of time and then you buy the ones that are really cheap or attractively valued. When you do this, mentally you are conditioned to hold for much longer than just a double in stock price. And when you are conditioned, you keep telling yourself that this is what I did, this is why I did this, and this is how I am going to invest and stay invested. The entire thought process from the conception stage to the point of buying and across the period of ownership is then aligned clearly. You don't get distracted by making quick profits and you don't mind waiting a little longer to make much bigger profits. So the quick profit does not rob you of the bigger profits. So when you make a double, which may be 20% of the profits that you can make overall across the period of ownership, you don't get distracted and you wait for the 80% and you try to make most of the profits and you get that into your portfolio, into your financial success. So extending your success happens only if you prepare to extend your success. It is not an accident. It will not happen suddenly. It should start at the point of ideating the stock, and that will help you stay invested and that will stop you from selling too soon. Try this for 7-8 stocks across one market cycle and you will learn much more in that cycle than you learned across your investment experience. So one must try to do something very differently, learn what he needs to change about the way he invests, stay exactly where he needs to stay longer, and invest only where he can stay longer. That's the critical component that I believe will stop you from selling too soon. When you buy very high quality companies at very cheap valuations, convince yourself that staying is equal to winning, and that winning is equal to making tons of money. That in essence is what every investor must condition himself towards, and when you condition yourself towards that, you are well prepared for big investment success. Thank you for watching this video.